As investors continue to be concerned about the return on investment for AI spending, Nvidia shares are down about 6%. According to CNBC contributor Boris Schlossberg, the stock is currently around 30% lower than its peak. At BK Asset Management, he serves as the managing director of FX strategy. Boris, so it could be detrimental to Nvidia if customers reduce their demand for a significant investment in AI. I'm not sure what's going on with Blackwell chips and all that, but the price action alone is getting everyone's attention. Here, what are you doing with the stock? For those of us who have endured that, I believe it's similar to PTSD. Is this another Cisco? Not in my opinion, but I still believe AI has a lot of potential. Nvidia will undoubtedly gain the most from it. Indeed, there is still a lot of demand for the Blackwell chips, and they plan to begin shipping them in the third quarter. It's arguably one of the most attractive chances at the moment, in my opinion, considering all of the upheaval they've experienced and the correction they've already undergone from the highs. Given the volatility, the strategy is to sell puts and receive a 50% discount on every item in the business. Only the first 50 music clients will be able to take advantage of this deal. Therefore, let it come to you. Just the put that expires this week, 87s, will offer you $1, and you may purchase the stock at a 13% discount to its present price. Since I still believe it will be a very, very good play in the long run, if I were going to post a position in Nvidia right now, I would just be selling puts and attempting to let the stock come to me. Due in significant part to the growing need for artificial intelligence and high-performance computing, Nvidia, a titan in the semiconductor business, has performed exceptionally well in recent years. However, given the market's volatility, the issue is raised. Is Nvidia a dependable safe haven in times of market decline? We must examine Nvidia's performance during prior market downturns in order to comprehend its resilience. Let's begin with the financial crisis of 2008. At the time, Nvidia's primary concentration was on gaming graphics processing units. The business did go through a slump, like many others, but what's remarkable is how fast it bounced back. Nvidia showed the ability to recover even though the overall market suffered greatly, indicating its inherent resilience even during trying circumstances. The COVID-19 epidemic precipitated a severe market meltdown in 2020. The circumstances were different this time. In addition to surviving the storm, Nvidia turned out to be a powerful performer. The demand for GPUs increased due to the rise in remote work and the expansion of online gaming during lockdowns, which caused Nvidia's stock price to soar. It was evident that the business was not only robust, but also in a good position to benefit from the new normal. Some members of our investment committee are moving or dislocating, if you want to use that word, yesterday to create new roles or expand existing ones. Now joining us from New Edge is Rob Sin. It's interesting, Rob, because we've talked about not being at Nvidia a lot over the past few months. Although you have a variety of tech names, you didn't own this one until recently. Tell me why. As you can see, Scott, when we examined our portfolio, it's specifically benchmarked against the Russell 1000 Growth Index. Additionally, if you look back to the heights, the index was up 21%, while the average stock in the Russell 1000 Growth was up 5%, and our average stock was up 15%. And not owning Nvidia was the cause of all that performance and all that underperformance. As a result, it calls into question how you construct portfolios that are meant to behave in a particular manner within client accounts and ensure that you are not taking on what is known as active risk or tracking error. As a result, yesterday we examined our portfolio and discovered that O'Reilly, a stock that has been underweight for a long time, is still a high-quality company. Although they possessed many protective traits and produced good returns, they were trading at a very high PE in comparison to their historical performance, and same-store sales were beginning to decline. In order to successfully upgrade quality, take advantage of a recent valuation reset, reduce our tech underweight, and lower our tracking error and active risk, we look to that position to shift into a position similar to Nvidia within our portfolios. Additionally, we thought that a half position made sense because they will be making money in the coming weeks. It should be noted that we did not execute a full position because we continue to believe that there is some short-term risk, whether it be due to the unwind this interest rate move, or additional jobs data that could frighten markets. We do believe that there may be a chance to purchase more at lower prices, but the takeaway for your investors is that you cannot simply consider the big picture when volatility is there. You need to be tiny and surgical in what you're going to do. And as this volatility continues, I would imagine that we will be making several adjustments to improve the quality of all 5 of our strategies across all of our portfolios. None of us are certain yet whether this is an undesirable growth scare or a welcome cooling. If the latter, we will have several opportunities. The important thing is to get clients ready to take action. I'd like to share with you another unusual activity we did. We were long duration a month ago. I've never witnessed a bond move like the one we've witnessed here, and since it's gotten so unappealing, we've closed that out and are currently cutting duration. According to Rick Reeder and all of the committee members, there is a lot to accomplish in times of volatility because, if you're ready for it, it can lead to opportunities. Nvidia is well positioned today, supported by a number of factors. Its domination in AI comes first. Nvidia is at the vanguard of the AI revolution because to its GPUs, which are now the industry standard for training AI models. One of the main factors influencing AI's long-term growth prospects is its leadership. The data center industry comes next. Demand for Nvidia's high-performance computing solutions is increasing due to the increased reliance on cloud computing, which strengthens the company's position in the market. Not to be overlooked is the automotive industry. With its foray into driverless cars, Nvidia has a huge chance to expand and might become a major force in the transportation industry in the future. But things aren't always easy. One major issue affecting Nvidia's production capacity and, consequently, its profitability is the continuous shortage of semiconductors. Additionally, the competition is getting more fierce as AMD and Intel compete for a bigger market share. Furthermore, a possible slowdown in the economy as a whole may reduce demand for expensive GPUs, which would introduce even another degree of risk. This morning, we are keeping an eye on Nvidia's stock. Right there on your screen is the ticker symbol NVDA. After leading the Magnificent Seven's declines yesterday, Monday, when those stocks lost nearly $650 billion in a sharp global sell-off, the shares are now rising. Due to the stock's erratic performance over the past month, investors are unsure if this is the right time to purchase. Now, let's welcome Patrick Moorhead, the CEO and founder of More Insights and Strategy. Okay, so Patrick, if you haven't already been exposed to Nvidia and aren't currently connected in any way, is this the ideal time to? Listen, investors always have a great chance to profit from massive sell-offs. In my opinion, the P/E ratio makes sense when you take growth rates into account. In the short term, there is some danger associated with this possible Blackwell push, which is the continuation of their H-series, but their midterm competitive position hasn't changed from anything. However, consumers may still purchase the H-series, so even with the short-term risk, I don't think there is much of a disadvantage. Is Nvidia a secure place then? The company's leadership in AI and HPC prepares it for long-term success, and it has undoubtedly demonstrated endurance in previous market dips. However, investors cannot completely count out market volatility in the near future. Although Nvidia seems like a good choice, it's important to do your homework, evaluate your own risk tolerance, and make sure your portfolio is diversified. Making wise investing choices will require keeping up with Nvidia's most recent advancements, as well as the state of the market as a whole. The important thing is to approach Nvidia with a balanced viewpoint and a thorough awareness of the dangers and benefits associated, regardless of whether you view it as a safe haven or a high-growth potential.